Hello, this is Richard C. Wilson with the Family Office Club. We're doing a member spotlight interview today with Jeff Lipschultz. And welcome, Jeff.
Hey, it's great to be here.
And Jeff, a life settlements investment firm called LIMC. And if you want to explain a little bit about what you're up to there as a team, Jeff, I think that'd be great.
Sure, my pleasure. So LAMC is basically an investment advisor whose primary offering is life settlements. And life settlements, to dive in for those who don't know, is an alternative asset class that's comprised of life insurance policies, ones that we've purchased. And it's the settlements from these policies which generate a reliable and fairly predictable return on investment.
Great. And I know sometimes there's confusion around it. I've brought up to one client before and they said, oh, I don't need life insurance. I'm all covered. I'm like, well, this is about, buying access to other people's life insurance policies that either they couldn't make the monthly payments on, so they were going to lose all the cash value, or they needed a better quality of life and they need the money now, not later, or maybe they needed it for medical treatment or some other nature, right? And so what types of investors would a life settlement be appropriate for, since you've been in this space for a while? Who's usually saying yes to this? Who's attracted to it?
The ones that are attracted to it are the more conservative investor, because there's certain elements, especially for family office, there's certain elements that match up just perfectly. And that is the term. This is a longer term investment. Obviously, you're not putting money in and getting a quick return. This is something where you're going to put money into a life settlement offering that has maybe 8 policies in it. And the settlements will be kind of staggered from 2 to, let's say, 7 or 8, 9 years. And so you'll patiently wait for certain settlements to come over time. So you have to be, it's not a liquid asset, it's an illiquid asset, but it's also a safe investment. Those looking for something a little bit safer, because of course we're dealing with a very regulated industry, the insurance industry. It's also predictable because the policies that you are investing in have a payout that's been predetermined, right? The settlement amount is the settlement amount. You know what you're going to get. You settle. So there's predictability. There's diversification opportunity here. So for those that are, trying to spread out their risk a little bit, especially in this current environment, to be able to balance out some of the risky side of your investments with something that's pretty stable and reliable and predictable. It's appealing to those types of folks. Family office does, I think, also appreciate the direct and transparent nature of our business. Our documentation spells out all the costs, risks, and fees associated with investing in these life settlements. But one other thing, and you touched on it, Richard, was that I think a lot of family office investment folks look at the altruistic nature, helping the world, if you will, of the investments they're considering. And we are helping seniors. These are mainly seniors that are selling their policies. They're ones that don't really need them anymore, but instead they need cash. They need cash to pay for other things. So this allows them to avoid reverse mortgages or selling assets they should keep, things of that nature, so that they can have cash in their pocket for future expenditures that they may or may not have, right? The uncertainty there.
Sure.
So we really hope that we're helping seniors too.
Sure. And I know some might be skeptical because sometimes people play the greenwashing card and saying, oh, we're fixing up this apartment building, we're doing impact investing, and except everyone wants to look altruistic nowadays. But I did see a stat that 500,000 people a year allow their life insurance policies to lapse, and only 3,500 a year are purchased. And that means everyone else just lost all the cash value of their policy because they couldn't afford to make monthly payments, or they didn't want to for some reason, maybe they didn't need it, but it's a massive amount that's still getting lost. So I think it is a real
face value, Richard. The face value is in the billions, and 1% of the seniors, 65 and up, only 1% or 2% of that population even knows this is an option. So education's a big part of what we're trying to do, is let people know that they have the option to sell their policy. Absolutely.
Right. Yeah, good point. And I think it's about the same percentage of investors who actually know what a life settlement investment is. And, I would guess it's 1 or 2%, unless it's one of the top, most sophisticated family offices. What about with the virus crisis going on? Someone might be watching this 5 years from now, 3 years from now, but recording this in April 2020, everyone's locked in their homes. kids home from school, as you were telling me, et cetera. So how does life settlements get affected by that potentially?
That's a great question, because the reality is this uncorrelated nature of life settlements is paramount to this type of investment. And I've been saying this for years, that when you look at the market, you're willing to absorb some level of risks that's coming from all kinds of external forces, from global activity to politics to the strength or health of any given industry within our nation. And now we have this other one, health of our citizens, right? So all these things impact our market in unique ways. And I've said for years that life settlements is an investment that's totally unconnected to all of these things. So the long-winded answer to your simple question is life settlements are unaffected by what's going on right now. If anything, people are gravitating towards it because they're saying, okay, here's something that, I don't have to worry about catching the timing and everything else. The timing is now for us. It's never a bad time to invest in a life settlement. And the IRR and the ROI associated with it stays the same regardless of what's going on in the market.
Sure. Okay. And what would be the number one best due diligence question for somebody to ask a life settlement investment firm? And maybe people don't ask you it very often, or maybe they never ask it and you don't know why, but what would be the number one question?
One of the things that people want to dig into, some of the savvy investors want to dig into, is the life expectancy data that's attached to this investment, right? Because obviously there's the IRR is a timeline, and it's tied to that. And when asked about this, we're sure to let people know that it is a third party that does this determination. It's just like the insurance companies use actuaries to do their work, figuring out their business. The life expectancy underwriters, that entire industry is focused on just this, and many of them have 8 to 15 years of experience. They're leveraging all kinds of data that's available these days, the health information, looking at current trends and ongoing trends. We went to a conference in New York last year, and they talked about leveraging transcripts from doctors' notes and pharmacy information. The more information you can have, the more obviously focused of a estimate you can get down to, and that's the key to it. Yeah.
Okay, great. And then what would be the $100,000 piece of advice you could leave us with when it comes to life settlements? Something that maybe you wish you would have known 10 years ago.
I think that when it comes to life settlements, it's really important. There's beyond the uncorrelated part, and I won't belabor that point. It's also important to realize that there are subtle differences between firms offering life settlements, because not only are you talking about the model, whether it be the fund model or a retail model or a custom offering that we can do for large investors, beyond just the models, there's the number of people that are involved in each of their processes, right? The more concise you can make that process, the less people that are involved means more profit to the investor at the end of the day. And so you have to really dig in and understand how they do their business, how they come up with their numbers and things of that nature, and who's involved and who gets a cut, so that that you're getting the optimized return on a life settlement investment.
Right, I see. Because otherwise, if you're not careful, there might be 8 different layers in it versus 2 or 4, right?
Yes, and there's many there's many types of firms involved in this where the size varies greatly, and that situation can occur.
Okay. And Jeff, what's the best way for someone to get in touch with you directly?
You can always email us directly at info@limcollc.com. You can go to our website too, www.limcollc.com. And we'd be happy to answer any questions you have. And there's obviously more information on life settlements and our company on our website.
Great. And are you on LinkedIn as well by chance?
Yeah, absolutely. Jeff Lipschultz on LinkedIn. I'm pretty easy to find there. Yes, absolutely.
Yeah. Great. And last name is Lipschultz, in case someone's just listening along audio-wise, Jeff Lipschultz. And thanks for being at our San Francisco Investor Summit recently. Appreciate your support there. And
absolutely.
Thanks for being part of the Family Office Club.
Yeah, it's great to be a part of it. Thank you so much, Richard.
Yep. Thank you, Jeff. Take care.